Aside from the Great Depression, the United States also suffered another downtime in its economic history. This was the Great Recession, a period between 2007 to 2009, where the economy was literally down in the dumps. Although it was not as long as the Great Depression that lasted for 10 years, it was just as bad in terms of its effect to the country's economy and to the public. Welcome to Financial Pay Dirt. If this is your first time visiting our channel, make sure to click the subscribe button for the best personal finance and investing advice on YouTube. During the Great Recession, everything came tumbling down from the small businesses up to the large banking and housing institutions. In this video, we are looking at how this happened and how the country was able to survive from this financial disaster. So first, how did the Great Recession start? Let's jump into a quick story of what exactly happened during that time. In November 2006, the Commerce Department warned that October's new home permits were 28% lower than in 2005. Experts say that at this point, the mortgage crisis could have been prevented, but the administration and the Federal Reserve did not realize how serious those early warning signs were. They thought the strong money supply and low interest rates would restrict any problems faced by the real estate industry. In April 2007, the Federal Reserve encouraged the federal financial regulatory agencies that oversee lenders to work out loan arrangements rather than foreclose. Alternatives to foreclose included converting the loan to a fixed-rate mortgage and receiving credit counseling through the Center for Foreclosure Solutions. Banks that worked with borrowers in low-income areas could also receive Community Reinvestment Act's benefit. In September 2007, the Fed began lowering interest rates. The Fed funds rate was 4.25%. But the Fed didn't drop rates far enough or fast enough to calm markets. The subprime crisis reached the entire economy by the third quarter of 2008 when GDP fell by 0.3%, thus signaling the beginning of the Great Recession. Mortgage giants Fannie Mae and Freddie Mac were greatly affected by the subprime crisis in the summer of 2008. The failure of the government-backed companies that insured mortgages signaled that the bottom was dropping out. And just to make things worse, in September 2008, the stock market crashed. The Dow Jones Industrial Average fell by 780 points in intraday trading. Until 2018, this was the largest point drop in history. It plummeted because Congress rejected the bank bailout bill. Although it is given that a stock market crash can cause a recession, it has already started even before this, and the crash of 2008 made a bad situation much worse. What events led to this financial disaster? Subprime mortgage crisis. During the housing boom from the early to mid-2000s, a lot of mortgage lenders began to expand the definition of creditworthy and extend mortgages to buyers with poor credit history who didn't fit the previous definition of a desirable borrower. Banks accepted these high-risk loans and began to buy them as mortgage-backed securities, a product that became very popular and yet was largely misunderstood by average investors. High demand for this new investment product led to an increase in risky lending practices and a dramatic increase in the housing market. But while housing prices were escalating, the Federal Reserve Bank also began raising interest rates, eventually raising to about 6% by June 2006. While those with fixed-rate mortgages remained unaffected, millions of new borrowers had mortgages with adjustable rates, which meant that they had lower affordable payments initially. But their monthly interest rate payments soon skyrocketed along with new interest rates. Yikes! Unable to make their payments or sell their homes for a profit, many defaulted on their loans. That brought more inventory into the housing market and prices continued to plummet. Ultimately, the housing market hit an all-time low in December 2008. Bank crisis. With unstable home prices and mortgage-backed securities clearly no longer the good investment they had appeared to be, banks stopped lending to each other in fear of being stuck with subprime mortgages as collateral. The Fed made a deep cut in the interest rate in August 2007 in an attempt to restore confidence, but this wasn't enough. In November 2007, the U.S. Treasury attempted to relieve the panic by creating a superfund for buying distressed portfolios of subprime mortgages designed to provide liquidity to banks and hedge funds. Then in December 2007, the Fed had created the Term Auction Facility, which supplied short-term credit to banks with subprime mortgages. Although these actions meant well, again, they were too late. Esteemed institutions such as Bear Stearns and Lehman Brothers collapsed, and mortgage giants Fannie Mae and Freddie Mac were on the brink of bankruptcy. The stock market crashed. Foreclosures had continued to rise, which caused the stock market to dive and eventually crash in September 2008, ultimately losing more than half its value. The double whammy of the falling housing market and stock market meant that Americans suffered staggering losses. In fact, between 2007 and 2011, 1/4 of American families lost at least 75% of their wealth, and more than half of all families lost at least 25% of their wealth. What was life like during this period? The biggest impact was on the workers. During the recession, jobs disappeared almost overnight. Sectors that rely on more discretionary spending, such as leisure, hospitality, and retail, mostly lost their jobs. Employment in financial industries also shrunk because businesses and individuals borrow less. Jobs in construction, tech, media, and entertainment also pulled back. But there are some jobs that didn't incur much losses: professional services like legal and accounting, government and education. However, workers may not get a raise or a bonus, and their hours and wages may be reduced. What did the government do to end the Great Recession? The Troubled Assets Relief Program. The Congress established this in September, which allowed the U.S. Treasury to bail out troubled banks by lending the banks billions to purchase preferred stock. Under this plan, banks would give the government a 5% dividend that would increase to 9% in 2013, which encouraged banks to buy back the stock in that time period. Aside from benefiting banks, in November 2008, the Treasury used them to rescue insurance giant American International Group to avoid bankruptcy. And then in December 2008, President Bush used the funds to bail out the top auto company, GM, Chrysler, and Ford, which faced bankruptcy and a massive loss of jobs. And then eventually, in February 2009, TARP funds were used for the Homeowner Affordability and Stability Plan, which allowed homeowners to refinance or restructure their mortgages to allow them to stay current on their payment and stave off further foreclosures. And the Home Affordable Modification Program, which encouraged banks to lower monthly mortgage payments for those facing foreclosures. The American Recovery and Reinvestment Act. In February 2009, President Obama proposed a $787 billion economic stimulus package designed to promote consumer spending and restore confidence. The act was composed of three main parts. Cutting taxes. Here, both individuals and small businesses saw relief. First, the cut reduced withholdings, resulting in a tax cut of $400 for individuals and $800 for families. Small businesses saw an increase in their tax deduction for equipment and tax credits for hiring unemployed veterans and students. Spending on assistance programs. The act extended unemployment benefits and increased payment to recipients of Social Security, Veterans Pension, or Supplemental Security Income benefits. It also offered a wide variety of tax credits for college tuition and first-time homebuyers, improved access to health care, and boosted funding to a variety of education programs, including teachers' salaries, Head Start, and Pell Grants for college students with financial need. And finally, creating jobs. This was aimed to modernize infrastructure while simultaneously creating jobs through funding projects that would enhance transportation, federal buildings, and water quality. With these solutions, the country underwent a slow recovery until in March 2013, the Federal Reserve announced that household wealth had climbed to around $67 trillion by the end of 2012. That was about $2 trillion more than 3 months earlier and represented a 91% recovery from the losses suffered. What changes happened after the Great Recession? Regulated loans. Now, experts know that regulating credit cards, loans, and mortgages and creating more rules for all consumer financial products is a must, most notably at the present. More information is required for mortgage borrowers to ensure they understand the risks. Banks also must verify borrowers' income, credit history, and job status to weed out riskier loans. Bank regulation. The banks are now banned from using or owning hedge funds for their own profit, and they are required to use hedge funds only at a customer's request. Hedge funds are also required to be registered with the Securities and Exchange Commission, and data about their trades and portfolios should be provided, since one of the underlying causes of the Great Recession in 2008 was that investors didn't fully understand these complex products. Monetary risky derivatives. Financial contracts whose value is derived from an underlying asset which a buyer agrees to purchase at a specific price are now regulated by the Securities and Exchange Commission or the Commodity Futures Trading Commission and are traded at a clearinghouse like the stock exchange. Predicting a recession is very difficult and is a tricky business, but nothing beats educating yourself since the cause of a recession are largely outside our individual control. There you go, guys. You just found out what happened during the Great Recession and how America was able to pass through this. What do you think was the worst thing that happened during that period? Let us know below. Thank you for watching. If you liked the video, let us know by dropping a comment and hitting the like and subscribe button. Also turn on your bell notification so you don't miss out on our future videos. See you next time.